Hi guys, welcome back with me. Don't forget to like, comment, share, and subscribe this channel. The volatility cascade will the Fed blink. Major currencies have been in free fall over the last few months. The Fed remains steadfast in its goal to tame U.S. inflation. The fixed income market has become unglad as forex volatility surges. A quickly slowing house market is of weakening economy. There were signs that the Fed's later is focused on something inflation may just be causing a global currency crisis. Maybe that's an understatement or even just stating the obvious. Three of the world's most important currencies have endured their own bouts of extreme volatility and massive declines lately. First, it was the euro dropping below parity during the summer. Then, the yen fell got shambles as the USD or GPY paid went from near 100 in recent years to about 145, with the last 20% of that move coming in very short order. Finally, the bears punctured on the British pound. The cable, as it's known in the forex market, dropped to fresh all-time lows against the greenback, falling under a prior tough setback in 1985. Humming in on the domestic market, Humming in on the domestic market tough, there are more signs that things are breaking. Consider that lumber futures have fallen to their lowest price since the first half of 2020, a, a key harbinger of economic activity and an area that was once pressured by supply chain woes. Commodity prices appear to be normalizing to put a positive spin on things. Lumber future low since June 2020. For real estate specifically, Zillow now report that U.S. home value has declined for two straight months. That sharp bearish reversal from massive monthly gains in from the middle of 2020 so the first half of this year. And who knows what September reading will reveal given the massive surge in mortgage rates. The low home value index saw August 2020 home price drop in July and August. More bad news on Monday mortgage. New daily report that the average rate on a conventional 30-year fixed rate mortgage jumped to a whopping $6.87. We have not seen that since the mid 2000. It seemed hard for the residential lending market to function with so many borrowers locked into exceptionally low mortgage rates. Moving from one house to another means refinancing to a potentially crippling rate. Uh, is it time for the Fed to pivot? More 5% plus advance in the US dollar index over the course of just a few days may cause Chair Jerome Powell and the FOMC to reconsider such a hawkish stance. What's depressing for the rest of the world is that the US is essentially outsourcing inflation. After all, foreign national feel higher commodity price so much worse as their currency drop in value. Do I have you about ready to salute your words? Take heart, we are near one of the most bullish parts of the vaunted presidential electric cycle. Moreover, with the fix back in the 30 as of Monday afternoon. There are inkling of some solid panic in stock. There's legitimate panic in bonds with the 10-year treasury up another 20 basis points near the high on Monday, as GPM Morgan Marco Kolanovic said in a note. There are some signs of a bottom forming. Maybe that's all from me. Thank you for watching. Don't forget to like, comment, share, and subscribe this channel.